The US dollar opened Thursday's trading session lower across Iraq, with the exchange rate hovering around 153,000 Iraqi dinars per 100 US dollars in both Baghdad and Erbil. According to market surveys reported by Shafaq News, the dollar was trading at 153,000 dinars per $100 in Baghdad's Al-Kifah and Al-Harithiya exchanges. This represents a modest decline from Wednesday's level of 153,300 dinars per $100, indicating that the US dollar weakened slightly in the parallel market at the start of Thursday's trading. While the movement may appear relatively small, exchange rate changes of this nature continue to attract significant attention from traders, businesses, investors, and Iraqi citizens who closely monitor daily fluctuations in the country's currency market. It is important to understand that these figures refer to the parallel market, sometimes called the unofficial or open market, and not the official exchange rate established by the Central Bank of Iraq. The Central Bank of Iraq continues to maintain its official exchange rate, and as of the time of this report, there has been no official announcement from the Iraqi government or the Central Bank of Iraq regarding any revaluation of the Iraqi dinar, any redenomination, or any change to the official exchange rate. Reports discussing movements around 153,000 dinars per $100 relate only to trading activity within the parallel market and should not be interpreted as evidence of an official policy change. The decline recorded on Thursday follows Wednesday's trading session, during which the dollar stood at approximately 153,300 dinars per $100 in Baghdad's central exchanges. A decrease of around 300 dinars per $100 may seem relatively limited, but in foreign exchange markets, even modest daily movements are carefully observed because they often reflect changing supply and demand conditions. Currency dealers, importers, exporters, financial analysts, and ordinary citizens all pay close attention to these daily adjustments since they can influence purchasing decisions, business planning, and expectations about future market trends. Within Baghdad itself, exchange shops reflected slightly different buying and selling prices compared to the central exchanges. According to the market survey, exchange shops sold the dollar at 153,500 dinars per $100 while purchasing dollars at 152,500 dinars per $100. This difference between buying and selling prices represents the spread that exchange businesses use to cover operating costs, manage market risk, and earn profits. Such spreads are a normal feature of foreign exchange markets around the world and can widen or narrow depending on market volatility, liquidity, and customer demand. Meanwhile, in the Kurdistan region's capital of Erbil, exchange shops reported selling prices of approximately 153,050 dinars per $100 and buying prices near 152,950 dinars per $100. The relatively narrow difference between buying and selling prices in Erbil suggests that market conditions remained fairly stable during the opening hours of Thursday's trading session. Although Baghdad and Erbil often experience similar market trends, slight regional differences can occur due to local demand, trading volumes, transportation costs, and other market dynamics. The movement observed on Thursday may indicate that the supply of US dollars increased slightly relative to demand during the opening of trading. Currency prices in Iraq's parallel market are heavily influenced by the balance between buyers and sellers. When more dollars become available or demand weakens, prices typically decline. Conversely, when demand increases or the available supply becomes tighter, the dollar tends to strengthen against the Iraqi dinar in the parallel market. Several factors can influence this daily balance between supply and demand. One of the most significant influences comes from the Central Bank of Iraq's foreign currency sales through its official mechanisms. Although the official exchange rate remains unchanged, adjustments in liquidity, banking operations, compliance measures, or access to foreign currency can indirectly affect the amount of dollars circulating in the parallel market. Increased availability of dollars through official channels may reduce pressure on the unofficial market, while reduced availability may have the opposite effect. At the same time, importer demand plays an important role in determining daily exchange rates. Iraqi businesses frequently require US dollars to purchase goods from international suppliers. Demand for imports fluctuates throughout the month depending on shipment schedules, seasonal purchasing patterns, consumer demand, and business activity. If importers require fewer dollars on a particular day, the exchange rate may ease slightly. Likewise, stronger import demand can place upward pressure on the dollar within the parallel market. Public sentiment also contributes to daily currency movements. Individual consumers may buy dollars for travel, education expenses, medical treatment abroad, savings, or personal financial security. Expectations regarding future market developments often influence these decisions. When confidence in market stability improves, demand for dollars may soften. Conversely, uncertainty can encourage greater demand for foreign currency as individuals seek to preserve purchasing power. Regional and international economic developments also affect Iraq's currency market. Iraq's economy remains closely connected to global oil markets because oil exports generate the overwhelming majority of government revenue and foreign currency inflows. Changes in international oil prices, therefore, have the potential to influence broader economic conditions, government finances, and foreign exchange liquidity over time. Although a single day's exchange rate movement cannot be attributed solely to oil prices, long-term trends in the energy market remain highly relevant to Iraq's financial outlook. Global financial conditions likewise play an indirect role. Developments involving U.S. monetary policy, international interest rates, inflation trends, geopolitical events, and worldwide investor confidence can influence the value of the U.S. dollar internationally. Since the dollar serves as the world's primary reserve currency, international developments often affect local currency markets, including Iraq's parallel market, even when domestic conditions remain relatively stable. The difference between the official exchange rate and the parallel market continues to receive significant attention from policymakers. Government officials and the Central Bank of Iraq have repeatedly emphasized efforts to improve financial transparency, strengthen banking compliance, modernize payment systems, and increase confidence in the formal banking sector. These initiatives aim to encourage greater use of official banking channels while reducing reliance on unofficial cash markets. In recent years, Iraq has introduced various banking reforms designed to modernize its financial system. These include expanding electronic payment systems, improving anti-money laundering procedures, strengthening international banking compliance standards, and encouraging wider participation in formal financial institutions. While these reforms require time to produce measurable results, many analysts believe they could gradually contribute to greater stability within Iraq's foreign exchange market over the longer term. It is also worth remembering that daily movements in the parallel market do not necessarily indicate broader economic instability. Currency markets naturally fluctuate from one trading session to another based on changing supply and demand conditions. A decline from 153,300 to 153,000 dinars per $100 represents a relatively modest adjustment within normal market trading activity. Investors and observers generally monitor longer-term trends rather than drawing conclusions from a single day's movement. Businesses operating in Iraq continue to monitor exchange rate developments carefully because imported products account for a significant share of goods available in local markets. Fluctuations in the cost of obtaining foreign currency can influence import expenses, wholesale pricing, and eventually retail prices paid by consumers. Stable exchange rates generally provide businesses with greater certainty when planning inventories, negotiating supplier contracts, and managing operating costs. Consumers likewise benefit from exchange rate stability because it can help moderate price volatility for imported products. Many everyday goods sold in Iraqi markets originate from foreign suppliers, making exchange rate developments relevant for household budgets. Although Thursday's modest decline in the dollar is unlikely by itself to produce immediate price changes, consistent stability over time can contribute to a more predictable economic environment. Financial analysts often caution against interpreting routine market fluctuations as confirmation of widespread rumors circulating on social media. From time to time, speculation emerges regarding possible changes to Iraq's currency policy, including claims about imminent revaluations of the Iraqi Dinar. However, as of the time of this report, there has been no official announcement from the Iraqi government or the Central Bank of Iraq confirming any revaluation, redenomination, or adjustment to the official exchange rate. Official monetary policy remains unchanged, and market participants are encouraged to rely on verified statements from official authorities rather than unconfirmed online speculation. The distinction between official policy and parallel market trading is especially important. Parallel market exchange rates reflect transactions between buyers and sellers operating outside the official banking system. These rates fluctuate daily according to market conditions and should not be confused with official monetary policy decisions. Changes in the parallel market do not automatically indicate that the central bank has altered its exchange rate framework. Currency traders often analyze patterns across several trading sessions to identify emerging trends. A single day of lower dollar prices may simply represent routine market adjustments rather than the beginning of a sustained trend. Future trading sessions will provide additional information regarding whether Thursday's decline reflects temporary market conditions or the start of a broader movement in the parallel market. The relatively similar pricing observed between Baghdad and Erbil suggests that market conditions remained broadly consistent across Iraq during Thursday's opening session. While minor regional differences exist, the overall direction of the market pointed toward a slightly weaker dollar compared to the previous trading day. Such consistency across multiple trading centers often indicates balanced market participation rather than isolated local factors. Another aspect influencing Iraq's currency market involves continued efforts to expand digital payment systems. The Iraqi government and financial authorities have promoted electronic banking services, payment cards, mobile banking, and digital financial infrastructure in order to reduce dependence on physical cash transactions. Over time, increased adoption of electronic financial services may improve market efficiency, strengthen transparency, and support better management of foreign currency flows. International organizations have also encouraged reforms designed to strengthen Iraq's banking sector and financial governance. Enhanced compliance with international financial standards can improve confidence among global financial institutions while facilitating smoother international transactions. Although these reforms do not produce immediate changes in exchange rates, they contribute to building a more resilient financial system capable of supporting long-term economic development. For investors observing Iraq from abroad, daily exchange rate reports provide useful information regarding market sentiment, but should always be interpreted within a broader economic context. Economic performance depends upon numerous factors, including fiscal policy, oil production, infrastructure investment, banking reforms, inflation, employment, and political stability. Currency movements represent only one component of a much larger economic picture. Businesses considering investment opportunities in Iraq likewise monitor exchange rate stability because predictable currency conditions support long-term planning. Stable financial markets can encourage domestic investment, attract foreign capital, and strengthen overall economic confidence. While modest daily fluctuations remain normal, sustained stability generally benefits both businesses and consumers. Oil export revenues continue to provide Iraq with substantial foreign currency earnings, making developments in global energy markets particularly significant. Strong export revenues support government finances and foreign exchange reserves, which in turn contribute to broader financial stability. However, international commodity prices remain subject to changing market conditions, emphasizing the importance of economic diversification over the long term. Economic diversification has become an increasingly important policy objective for Iraq. Expanding sectors such as agriculture, manufacturing, technology, tourism, logistics, and private enterprise could gradually reduce dependence on oil revenues while creating additional sources of economic growth. Successful diversification may also strengthen the country's resilience against external economic shocks. Banking modernization represents another key area of ongoing reform. Improving customer confidence in financial institutions, expanding access to banking services, increasing digital payment adoption, and strengthening regulatory oversight all contribute toward creating a more efficient financial system. These reforms may gradually reduce reliance on informal cash markets and support improved currency market stability. Thursday's trading figures therefore represent one snapshot within the broader evolution of Iraq's financial markets. The reported decline from 153,300 to 153,000 dinars per $100 demonstrates that exchange rates continue to fluctuate in response to ordinary market forces. Such movements are closely watched by financial professionals, businesses, policymakers, and citizens seeking insight into current market conditions. Looking ahead, traders will continue monitoring several factors, including future central bank foreign currency sales, importer demand, banking sector developments, regional economic conditions, international oil prices, and global financial trends. Each of these variables has the potential to influence market sentiment and daily exchange rate movements. For now, Thursday's opening reflects a modest strengthening of the Iraqi dinar within the parallel market relative to the previous trading day. While the change is relatively small, it highlights the dynamic nature of Iraq's foreign exchange market and the importance of continuous monitoring by market participants. Once again, it is essential to emphasize that, as of the time of the script, no official announcement has been made by the Iraqi government or the Central Bank of Iraq regarding any revaluation of the Iraqi dinar, any change to the official exchange rate, or any currency redenomination. The exchange rates discussed throughout this report refer exclusively to parallel market trading activity reported by Shafaq News and should not be interpreted as evidence of any official monetary policy change. As always, viewers are encouraged to follow official statements from the Central Bank of Iraq and other authorized government institutions for verified information regarding Iraq's currency and financial policies.